A very good afternoon to all dear students. How are you all? I hope you all are studying hard. You all are healthy, happy, and studying for your examinations that are due in January 25. So today we will be completing chapter number 9. And in case any topic is left, as I have told you in the last session also, I'll complete that up in the next session, which is scheduled for chapter number 10 on Wednesday, right? So before starting with the session for today, I want all of you to please reply as to whether you have gone through the module till where I asked you in the last session. A number of topics with respect to this chapter, chapter number 9, which is special features of audit of different types of entity. We have covered a number of topics. Specifically with respect to hire purchases and lease, I have asked you to go through that topic as a homework. So please send in a reply whether you have understood that topic or any doubt is there. So students, today we will be starting with a very important topic of this chapter, which is what? Government audit, right? So see, first of all, let us try to understand what is meant by the term government auditing. So government auditing is just a minute. Just a minute. Government auditing is a systematic just give me a minute. So government auditing is what? It is the objective, systematic, professional, and independent examination of financial, administrative, and other operations of a public entity made subsequently to their execution for the purpose of evaluating and verifying them, presenting a report containing explanatory comments on audit findings, together with conclusions and recommendations for future actions by responsible officials, and in case of examination of financial statement, expressing the appropriate professional opinion regarding the fairness of the presentation. Now, what is it? We will try to understand and learn this definition, government auditing. So you all are aware about the definition of the term audit, right? That it is an independent examination of financial information of any entity, whether profit oriented or not, irrespective of its size and legal form, where such an examination is conducted to express with a view to expressing an opinion thereon, right? Now here you will find that almost the foundation is going to be the same, but now audit in specifically related to government auditing. The definition of term government auditing, right? So it is an independent examination, but it is objective, systematic, professional, and independent examination, right? And there it was of financial information. Here it is of financial, administrative, and other operations. Then when you did the definition of audit, it was any entity, but here it is what? Of public entity. Is it clear? And just read this last line. And in case of examination of financial statement, expressing the appropriate professional opinion regarding the fairness of presentation, right? So examination of financial, administrative, and other operations of a public entity. And again, with the view to give what? Professional opinion. But since we are discussing the definition of the term government auditing, so here there are certain terms relevant to this definition only, that is made subsequently to their execution. So once the financial, administrative, and other operations have been done, once they have been executed, After that, such examination is done. So made subsequently to their execution. What is the purpose? For the purpose of evaluating and verifying them. For the purpose of evaluating and verifying them. Then presenting a report containing what all things? Explanatory comments on audit findings, together with conclusions and recommendations. For what purpose? For future actions by the responsible officials. Right? So a very important definition, but if you, and a lengthy definition also, but if you just try to understand the gist or the idea about each and every line of this definition, I'm sure you will be able to understand it and learn it also after understanding. So government auditing is what? Objective, systematic, professional and independent examination of financial, administrative and other operations of a public entity, made subsequently to their execution by, for the purpose of evaluating and verifying them, and then presenting a report containing explanatory comments on audit finding, conclusions and recommendations by, so that future actions by responsible officials can be taken, and where the examination of financial statements has been done, expressing an appropriate professional opinion regarding the fairness of the presentation. So this is the definition of the term government auditing, right? Now, why government auditing? Why is the concept of government auditing there? So government audit, it aims to ensure accountability of the executive in respect of public revenues and expenditure, the taxes that are collected. And let's say those taxes are then spent or expended on, let's say, the construction of roads. So it aims to ensure accountability of the executive in respect of public revenue and expenditure. Further, no expenditure can be incurred unless it has been voted upon by Parliament or state legislature, and funds for every such expenditure must be provided out of Consolidated Fund of India. Now, what is meant by the term Consolidated Fund of India? So basically, it consists of all the revenues received from direct and indirect taxes, all loans taken by Government of India, and all repayment of loans received by the Government of India. So this is what Consolidated Fund of India, and wherever the government spends certain amount on, let's say, the construction of roads, or let's say any other facilities, so you will see that it is out of the Consolidated Fund of India, which includes what? The revenues in the form of direct, indirect taxes, the loans taken by the Government of India, and all amounts of repayment of loans that is received by the Government of India, right? And see, whenever any expenditure is to be done, we have seen that it cannot be done unless it is voted by the Parliament or state legislature. So before the expenditure is done, it needs to be voted by Parliament or the state legislature. And after the expenditure has been done, the accounts are closed, appropriation accounts are prepared, which are scrutinized by PAC, Public Accounts Committee, right? So you can see that before the expenditure and after the expenditure has been done, there is certain scrutiny also. Now, what is PAC? Public Accounts. It is a committee of selected members. So it is a committee of selected members of parliament constituted by the Parliament of India for the purpose of auditing the revenue and expenditure of Government of India. Right? So students see just that there is a parliamentary control or legislative control which is there before the expenditure is done and after the expenditure is incurred. Is it clear? I hope it is clear, and I hope that just a minute. And I hope the definition of government audit is also clear. Quickly send in your replies. Is it clear? Government auditing. Sukaina, Sunil Gangadev, Sudarshan, please reply. So now the next topic is, what are the objectives? Why government auditing is done? The objectives. So first and foremost, which is very simple, public accounting of government funds. So whatever are the government funds, revenue in the form of taxes, direct or indirect, any loan that is taken by the government. So if that out of that any expenditure is incurred, so government auditing, the the first and foremost one of the objectives of government auditing is to account for that public fund as to how that fund has been utilized. So public accounting of government funds. Then appraisal of various government policies. So it means that public accounting of various government policies relating to operations, management, programs, and policy aspects of public administration, along with accountability of the officials also, as to the officials who are involved in sanctioning the expenditure or incurring the expenditure, to consider their accountability. This is also one of the objectives of government auditing. Then once all this thing is done, it provides a base for corrective action. So highlighting the lapses of lower hierarchy, which thereby helps the supervisory level to take corrective measures. Simple. And last but not the least is what? Administrative accountability. So administrative accountability includes two things. So first is what? Ensuring accountability of administration to legislation. So basically, for all those who are involved in administration, their accountability to the legislature, right? So whether the person is involved in sanctioning the expenditure, the person is involved in incurring the expenditure, right? And functioning as an aid to administration. See, government auditing will help in administration also. Why? Because see, we have seen these 2 points, that it will help in what? It will provide for base for corrective action. It will help in appraisal of government policies, and it will help in accounting for the public funds. So the last objective is administrative accountability, right? Now, students, in India, this function of government audit, it is done by one of the independent statutory authority, which is CAG, Comptroller and Auditor General of India. Please do not write controller. It is Comptroller, Comptroller, Comptroller and Auditor General of India, through the agency of Indian Audit and Accounts Department, right? Now, the next thing that we are going to study is about the various constitutional provisions relating to CAG, the duties and power of CAG, the appointment removal of CAG, right? So before starting with this, I want all of you to reply, is it clear? To Sukanya and Prithvi Raj are saying, yes, ma'am, it is clear. Chalo, that's good. Legal framework and CAG. So the legal framework is the all the provisions relating to appointment removal. These are all provided where? In the legal framework, that is the Constitution of India, right? Now, how CAG is appointed? So first of all, it says that the Constitution of India, it guarantees the independence of CAG. See, students, the independence of every auditor is important, and so is the case with Comptroller and Auditor General of India, who is conducting what? Government auditing, right? So the CAG is appointed by the President of India, and the CAG shall not be removed from the office except on the grounds of proven misbehavior or incapacity, right? So see, this also ensures independence, na? So appointed by President of India, and he shall not be removed from office except on the grounds of proven misbehavior or incapacity, right? Also, as in the case of the judge of a Supreme Court, CAG can be removed only when each House of Parliament decides to do so by a majority of not less than two-thirds of the members of the House present and voting. See, this also ensures independence, na? Because there is a set criteria as to how the CAG can be removed. And the provisions are same which applies to Judge of Supreme Court, that CAG can be removed only when each House of Parliament decides to do so, that too by a majority of not less than two-thirds of the members of the House present and voting, right? And the Parliament makes the law regarding which determines the salary and other conditions of the service of the CAG, right? So this was with respect to appointment and removal. Now the second point is relating to tenure. So there is a act, that is Comptroller and Auditor General's Duties, Powers and Conditions of Service Act 1971. So now students, if you just try to learn the name, now you will just see it is so simple. See, CAG, Comptroller and Auditor Generals, and it deals with CAG's what? Duties, powers, conditions of service. Act 1971. It lays down the fixed tenure of the office of CAG. Further, the salary that will be paid to CAG will be equal to the salary of the Judge of Supreme Court. And again, it is what? Since it is fixed, the tenure is also fixed. The salary is also fixed. Or then thereby it enhances what? It strengthens on independence. Right? Why? Because see, threats to independence are minimized. Why? Because fixed tenure is there. Salary is fixed. So these factors now will not influence auditors' independence or CAG's independence. Right? Is it clear? So this was with respect to the tenure. Now there are three articles in our constitution. So we are going to read constitutional provisions relating to CAG, article number 140, 150 and 151, right? So as I have told you that now we'll be studying about various duties, powers and other provisions relating to CAG. So these are the constitutional provisions. So Article 149 says that CAG needs to perform the duties and exercise the powers in relation to the accounts of union and of state or any other authority or body which are prescribed under any law made by the parliament, right? And where are the functions and powers of CAG discussed in detail? So I have written this in short form. CAG duties, powers and conditions of Service Act, just a minute, Conditions of Service Act 1971, right? So I have written this in short form here. So Article 149 says that CAG shall perform duties and exercise the powers in relation to the accounts of union and of state or any other authority body which is prescribed under any law made by the parliament. Further, where are the functions and powers defined in detail? These are defined in the CAG's Comptroller and Auditor General's Duties, Power, Condition of Service Act 1971, right? Article 150. Article 150 says that the accounts of the unions and the state, they shall be kept in such form as the president may prescribe, but on the advice of CAG. So who is going to prescribe? The president, but on advice of CAG. Clear? Article 151. So Article 151 of the Constitution, it says that the reports of the CAGs relating to the union or the state, this shall be submitted to the president or the governor of the states, right? And the president or the governor of the state shall cause such report to be led before each house of the parliament or state legislatures. So I'll repeat this point. Article 151 says that the reports of CAG relating to union and state or state shall be submitted to the president or the respective governors, who shall cause such audit report to be laid down before the House of Parliament or the respective state legislature. Is it clear? So these were the constitutional provisions. So you may get a 3-mark question with respect to, you may be asked to list down the constitutional provisions relating to CAG. So Article 149, 150 and 151 will come. Is it clear? Now, what are the duties? So students, I'll be teaching you all these duties. We'll be discussing these duties from your module. So first, let us just have a look at the various duties. So to compile and submit the accounts of union and state. Then we will study about the various general provisions relating to audit. audit of receipts and expenditure, audit of grants and loans, audit of receipts of union and states, audit of accounts of stores and inventory, audit of government companies and corporation. So we are on page number 9.8 of your module. So we are on page number 9.8. So we have done article 149, 150 and 151, right? Now what are the various duties? So first is to compile and submit the accounts of union and state. So it is the duty of CAG to compile the accounts of union and each state from the initial or subsidiary accounts relating to the audit and accounts offices under his control by treasuries, offices and department responsible for keeping such accounts. So whenever the CAG has to compile the accounts of union or state, they will get the data of what initial and subsidiary accounts from the treasuries or officers or departments responsible for keeping that account, right? And after compiling such accounts, they will prepare what? Annual receipts and disbursement for the purpose of union and of each state. And just a minute. And shall submit those accounts to the president or governor of the state or the administrative of the union territory. So if you just try to make the notes for this point, you will write that CAG will compile the accounts for the union and each state out of the data of what? Initial and subsidiary accounts, right? And will prepare what? Annual receipts and disbursements, and the report shall be submitted to what? The president or the governor of the state or the administrative of the union territory. Is it clear? The next point is relating to general provisions relating to audit. So here we'll be discussing about all expenditure that is incurred out of the consolidated fund of India. Then we'll be discussing out the various transactions of the union and the state. And then we'll be discussing about trading and manufacturing and P&L account and balance sheet of the department of union or the state, right? So general provisions relating to audit. So you will see that it is mentioned that it will be the duty of the CAG to audit and report, to audit and report, to audit and report. Three things. First is what? Audit and report on all expenditure from the consolidated fund of India and of each state or of union territory having a legislative assembly. Students, you will see that this particular line is repeated a number of times in this chapter. So why not devote your time and energy towards learning this line? So all expenditure from consolidated fund of India or of each state or of each union territory having a legislative assembly, right? So auditor will ascertain as to whether the monies that are used, that the expenditure, the money that is being used to incur the expenditure, whether that is legally available, whether that has been used for the specified purpose only, and whether it conforms to the authority, right? So the person who has made such expenditure, whether he has the authority or not, the purpose was as was implied or not, and whether that fund was legally available. So three things, right? Then B point, to report and to audit and report all transactions of the union state relating to the contingency funds and the public accounts. And the last is to audit and report on trading, manufacturing, profit and loss accounts, balance sheet and other subsidiary accounts kept in any department of union or of state, right? So this is with respect to all transactions, and this is basically with respect to the trading, manufacturing, P&L, balance sheet of any department of the union or the state. So these are the provisions relating to what? Audit. Then is audit of receipts and expenditure. And in this point, first of all, we need to understand what is meant by the um, authority which is substantially financed by grants and loans from the Consolidated Fund of India. So what is meant by substantially financed? So it means that where any grant or loan to a body or authority from the Consolidated Fund of India or any state or any union territory having a legislative assembly. So I've told you that this point you will see is repeated a number of times in this chapter, right? So if any grant is given to any authority out of this Consolidated Fund of India or state or any union territory having a legislative assembly in a financial year, and that amount is not less than 25 lakh rupees, and the amount of such grant is not less than 75% of the total expenditure of that local body or authority, then it shall be deemed that such authority has received what? Is substantially financed from the consolidated fund. Is it clear? So amount is what? 25 lakhs. And if you talk in terms of percentage, then not less than 75% of the total expenditure of that body or authority. So we were discussing on audit of receipts and expenditures. So it says that where anybody or authority is substantially financed by government grants or loans from Consolidated Fund of India or state or union territory having a legislative assembly. You all know what is the definition: not less than 25 lakhs and not less than 75% of the total expenditure of that body of authority. Then what will what is meant by then audit of receipts and expenditure? So it will be the duty of CAG to audit all receipt and expenditure of that body or authority and to report on the receipts and expenditure audited by him. So with respect to the body authority substantially financed from the Consolidated Fund of India or of any state or union territory having a legislative assembly, the CAG has a duty to audit all the receipts and expenditure of such body authority and to report on such receipts and expenditure. Is it clear? Now, audit of grants and loans. So again, see, any specific grant has been given from the Consolidated Fund of India or state or union territory having a legislative authority to any body and loan. So what auditor is going to check with respect to audit of grants and loans? So first of all, important point is what? The purpose for which such grant and loan has been given. And auditor shall scrutinize, CAG shall scrutinize the procedure by which the sanctioning authority satisfies himself with respect to fulfillment of conditions subject to which the grant or loan was given, and for this purpose shall have right to access after giving reasonable previous notice to the books and accounts of that authority. So see, 2-3 things are being talked about in this audit of grants or loans. So first of all, it should be for a specific, where a grant is given for a specific purpose. So CAG shall scrutinize how the sanctioning authority is satisfying itself with respect to the fulfillment of the condition subject to which the grant was given. So grant was given for a specific purpose. So certain conditions must have been put. So auditor CAG will scrutinize as to how the sanctioning authority satisfies itself that all the conditions have been fulfilled based on which the grant or loan was given, right? Further, CAG shall have access to the books and accounts of that authority after giving reasonable previous notice. So reasonable previous notice should be given that will be requiring your books and accounts. Is it clear? This is with respect to audit of grants or loans. Next is audit of receipts of union or state, right? So receipts can be in the form of what? The various taxes, right? So it says that the rules and procedures that are there in order to ensure effective check on assessment, collection, proper allocation of revenue, and whether such rules and procedures are duly observed, and to make for this purpose such examination of the accounts as he fit and report thereon. So see, with respect to the receipts of the union and states, and majorly receipts is from taxes, we all have seen. So first of all, whether there are rules and procedures for ensuring effective check on assessment, collection, and allocation of the revenue, and whether such rules and procedures are duly complied with, duly observed. And for that purpose, CAG will conduct an examination of the accounts and shall report on that. Audit of stores and inventory, we will discuss this in detail later on. And in fact, we have a discussion with respect to this also in detail later on, right? Audit of government companies and corporations. So CAG will appoint the auditor in terms of section 139, subsection 5 and subsection 7. Abhi just try to understand this. And see, CAG may give a direction to the auditor so appointed. So when the audit report is submitted to the CAG by the auditor so appointed, the auditor is going to submit the audit report to the CAG. Along with that, the directions that were issued by the CAG, the actions that were taken thereon, and the impact on the accounts and financial statement, that will also be included along with the audit report that is submitted to CAG. We will be doing this detail later on also, right? Now, so Abhi, we have studied about what the various duties. Now, what are the various powers of CAG? So now we'll be doing the next topic, which is what? Powers of CAG. So there are 4 powers that are given. Just try to understand logically. You are going to find this chapter really very interesting and very easy also. So the power of CAG is to inspect any office of accounts which are under the control of union and state, including the office responsible for creation of initial and subsidiary ledgers. If you remember, when we did the first point, let me take you through that point. So when I asked you as to how you can make summary, so I told you that from the initial and subsidiary accounts that are prepared by the respective departments. So CAG is going to get that initial subsidiary accounts based on which they are going to compile the accounts of union and each territory. So the first power of CAG is to inspect any office of accounts under control of union and state, including office responsible for creation of initial and subsidiary accounts. So for those offices that are providing CAG with the data with respect to initial and subsidiary accounts, CAG can inspect the office of such, CAG can inspect such office also. Clear? Then, to require that the accounts, books, papers, documents relevant to any transaction under audit be sent to specified places. So if any accounts, document, paper, or any books are required, which are relevant for a particular transaction which is under audit, so the CAG may require that such accounts, books, paper, or document be sent to specified places. This is the second. The third one is to put questions and make observations, right, to the person in charge, or to call for such information as the CAG considers necessary, right? And the last is power to dispense. Power to dispense is, see, power to dispense with any part of detailed audit of accounts or class of transaction and allow what? Limited checking. Dispenses to say that this is not required. So detailed checking is not required, but limited check will be fine. So let us just read this 4 point from the module also. So first is to inspect any office of accounts under the control of union or state government, including office responsible for creation of initial and subsidiary accounts. To require that accounts, books, papers, documents relevant to a transaction under audit be sent to specified places. Then to put questions, to make such observations, of whom? Person in charge of office, or to call for such information which the CAG requires necessary for the preparation of the accounts or report in his duty to prepare. And last but not the least, to dispense with any part of the detailed audit of accounts, class of transaction and reply such limited checks. Is it clear? Yes. Is it clear? Now, expenditure audit. So, the audit, what is meant by expenditure audit? It is the audit of government expenditure, right? Now, this forms the audit of government expenditure. It forms a major component of government audit. And here we'll be studying about 5 types of audit. That is audit against rules and orders, audit of sanctions, audit against provision of funds, proprietary audit, and the last is performance audit, whereby we have further 3 categories. Okay? So the first one is audit against rules and orders. So basically, see, behind conducting expenditure audit, so see, you will find that whatever kind of audit we are going to see, we will see that the main idea is whether that expenditure is authorized or not by competent authority, and whether that expenditure is incurred within the limits. And here we'll be talking about various rules, regulations, various sanctions, how the fund is provided, proprietary audit, and performance audit. So, but the basic foundation is what? The fund should be what? Authorized by competent authority, and within it should be within the limit, right? So we are talking about any expenditure that the government incurs. For example, let's say on the construction of a road, of a highway, right? So audit against rules and orders, audit of sanctions, audit against provision of funds, proprietary audit, and performance audit, right? Audit against rules and orders, just try to understand the standards, these kind of audits by their name. See, rules and orders. So it basically means that the expenditure that has been incurred, it conforms to the relevant provisions of the statutory enactment. And these are incurred as per the financial rules, regulations framed by the competent authority. Okay? So let us do one thing. Let us read this in detail from your module also. So we are on page number 9.12. Audit against rules and orders. So it says that the expenditure that has been incurred, it should conform to the relevant provisions of the Constitution, right? And the expenditure should be in accordance with the financial rules, regulations, and orders issued by competent authority, right? Further, see, this is also known as regularity audit, right? And the rules and orders can be relating to what? Rules and orders regulating the powers to incur and sanction the expenditure. So whether the rules and orders regulating the powers as to who has the power to incur and to sanction the expenditure, whether such rules and regulations have been complied with. The rules and orders dealing with the mode of presentation of claim or withdrawing monies, the mode of presentation of claims against the government or withdrawing money from the consolidated funds, whether such rules and procedures have been complied with, whether detailed procedure to be followed by government servants in dealing with government transactions have been complied with, and rules and orders regulating the conditions of pay, service allowances, and pensions to government sanctions servants. So all these are what? Rules, audit against rules and orders. So what kind of rules and orders can be there? So first of all, when we talk about audit against rules and order, it aims to ensure that any of such expenditure, it conforms to the relevant provisions of the Constitution. So first of all, we're talking about Constitution, and then the financial rules, regulations, order issued by the competent authority, right? And it consists of rules and regulations of four kinds, that is rules and orders regulating the powers to incur and sanction the expenditure from consolidated fund of India or state and contingency fund of India or state. Rules and orders relating to mode of presenting the claims against government or withdrawing money from CFI, this consolidated fund. Then detailed procedure to be followed by government servants in dealing with government transactions, and rules and orders relating to it, the payments that are made to government servants for the service, pay and allowances, and pensions to government servants. Is it clear? Now, students, see, as such, the CAG is not here to frame the rules and regulations, right? So it says the job of audit is to see that these rules, orders are applied properly. It is, however, not the function of audit to prescribe what rules are to be framed. What rules are to be framed will be seen by executive government. The government will form those rules. So what will audit do? Audit will see whether such rules and orders are applied properly, right? Yes, when such rules and orders are being considered, during the course of considering the rules and rules and orders, the auditor may also consider whether such rules and orders are not inconsistent with the provisions of Constitution. They are consistent with the essential requirements of audit and accounts as determined by CAG. They do not come in conflict with the orders or rules made by any higher authority, and in case they have not been separately approved by competent authority, the issuing authority possesses the necessary rule-making power. So here in this paragraph, we are discussing that as such, the function of the audit here is not to frame the rules and orders. Those rules and orders will be framed by the executive government, the government who is executing the role of framing the rules and orders. Then what is the role of the audit? The role of the audit is to ensure that whether such rules and orders are applied properly, right? And it is the function of the audit to carry out examination of various rules, regulations, and orders issued by executive authorities to see that such rules and orders are not inconsistent with provisions of Constitution. Not inconsistent, then किसके साथ consistent होना है? Consistent with essential requirements of audit and account. Okay. They are not in conflict with the orders or rules made by any higher authority. And the last point says that if there is no separate approval of competent authority, then the issuing authority, the authority which is issuing such rules and audit, that should have the necessary rule-making power. Is it clear? This was with respect to audit of rules and audit against rules and orders. And student, you may get a 4-mark question whereby you may be required to write with respect to audit against rules and orders. So quickly tell me, is this topic clear? Shall we proceed on for the next topic, which is audit of sanctions? See, audit of sanctions. As the name suggests, so first of all, let us just have a look at the summary here. See, sanctioned. So the expenditure should be covered by sanction. And another thing is that sanction should be by competent authority. So see, the auditor has to ensure that each item of expenditure is covered by a sanction, either general or special, accorded by competent authority authorizing such expenditure. So let me just take you through the module also for this. Audit of sanctions. Right? We are on page number 9.13 of your module. So the auditor has to ensure that each item of the expenditure is covered by a sanction, which can be either general or special, of what? Competent authority. Right? So the authority sanctioning it is competent for the purpose by the virtue of the powers vested in it by the provisions of the Constitution and of the laws, rules, or orders. Is it clear? So audit of sanction में two things, general or special sanction should be there along with the by a competent authority. Competent for the purpose by the virtue of powers vested in it by the provisions of constitution or the law, rules or orders made thereunder. Is it clear? The third point is audit against provisions of funds, right? So it says that there should be provision of funds out of which the expenditure is incurred, and the expenditure should not exceed the appropriations so made. So two things. First of all, there should be certain provision of funds out of which the expenditure will be incurred. And secondly, such expenditure should not exceed the appropriations made. Right? So provision of funds out of which expenditure can be incurred and it should not exceed the appropriation so made. So let us just have a look at this from your module also. So audit against provision of funds aims at ascertaining that the expenditure incurred has been incurred for the purpose for which the grant and the appropriation has been provided, and the amount of such expenditure does not exceed the appropriation made, and it is for the purpose for which the grant or appropriation has been provided, right? Then the next is proprietary audit. Here also you may get a 4-mark question. Again, a very important topic. So proprietary audit. See, there are certain proprietary principles. So it says that the expenditure, so let us first have a look at it from the summary. So proprietary audit, so it basically says that whenever any public fund has been incurred, it should be incurred with the same prudence as it should be incurred in the same manner as the person will expend with his own money, right? So see, proprietary audit ensure compliance with general principles of financial propriety and bring out the cases of improper, avoidable, infructuous expenditure, even though the expenditure has been incurred in conformity with rules and regulations. So this first paragraph explains that even though the according to the rules, right? Even though the expenditure has been incurred along according with the rules and regulations, but chances can be there that there is what improper, avoidable or ineffective expenditure. Something that would have been bought for rupees, let's say 1,000, has been brought for rupees 10,000. So this is improper expenditure, though it was as per rules and regulation that this expenditure on that particular thing or that particular matter can be done. But the expenditure that has been incurred, it is what? Avoidable. For example, a building may be constructed for installing a telephone exchange, but may not be used for the same purpose, resulting in unproductive expenditure. So it is as per rules and regulations that you can make a building for a telephone exchange. But if you are not using that building for that purpose, it is again, then it is what? Improper, avoidable expenditure, right? So what the auditor has to do. So first of all, let us just see the various principles of propriety. So first of all, the expenditure that has been incurred, that should not to be more than the occasion demand. So as I've told you that if 1,000 rupees were to be spent, it should not happen that the government official is incurring, let's say 10,000 rupees, though the same thing would have been done in 1,000 rupees. So it should not to be prima facie more than the occasion demands. Is it clear? Every public officer is expected to exercise the same vigilance, same care in respect of expenditure incurred from public monies as a person of ordinary prudence would exercise in respect of expenditure of his own money. Is it clear? So basically, a person who is having his own money, jitna samajhdari aap the person is going to apply his prudence when he's spending his own money, same prudence the public officer should exercise when he is spending the public monies. Is it clear? Is it clear? Then the next point is that no authority, the person who is spending that amount, should use that amount for its own advantage. It should be for the public advantage. Then the public money should not be utilized for the benefit of a particular person or section of community unless there are four situations that have been given that a particular expenditure may be incurred for a particular purpose or the section of the community. So what are those cases where the amount involved is very insignificant? The claim for the amount could be enforced by court of law. If it has been enforced by court of law, then that person, suppose any person has been granted certain amount by the court of law, then that is to be given. The expenditure is in pursuance of recognized policy of custom, and see, in case there are any reimbursement of traveling bills, or let's say there are traveling allowances that are given, right? These are given to meet the expenditure which has been incurred with respect to a particular work, right? Now, such allowances should not become the source of profit for the recipient. So it should not happen that a traveling allowance was incurred, was given for rupees 1000, though the actual expenditure was only rupees 800. It should not become what? The source of profit for the recipient. Is it clear? So, see, in how to enforce such proprietary principle, it is the duty of the executive departments of the government. What the auditor has to do? The function of audit is to bring to the notice of proper authorities of wastefulness in public administration. Right? Is it clear? So this was with respect to proprietary audit, which is again very important. Now, the last is performance audit, and it is basically a full scope audit which consists of efficiency audit, economy audit, and effectiveness audit. And one more term that we'll be studying here is performance cum efficiency cum performance audit. So, performance audit. See, you all have studied in your business management, I remember in your 11th or 12th, about effectiveness, efficiency. What is meant by effectiveness? Effectiveness means that the end result is achieved, the objectives are achieved. And efficiency means that the results are achieved, but at a minimum cost, economically, right? So, performance audit consists of what? The scope of audit has been extended to cover efficiency, economy, and effectiveness, or you can say full scope audit. So what is meant by efficiency audit? So it means that the operations are conducted economically and whether they are yielding the results as expected out of them. Is it clear? Two things, that operations are conducted economically and yielding the results as are expected. Economy audit means what? That the government has acquired the financial, human, physical resources in a very economical manner. So it should not happen that if a labor is hired and it can be hired for, let's say, 500 per day, but the same has been hired for 800 per day. No. So it should be, the government should hire the financial, human, physical resources at economical manner. Effectiveness audit means that the overall targeted objectives are achieved as well as the efficiency efficiency means what? The attainment of the objective at the minimum cost. Now, what is meant by efficiency cum performance audit? So, it is objective examination of financial and operation performance of an organization, program, authority, function, and is oriented towards identifying the opportunities for greater economy and effectiveness. So, whether the work that has been done, whether that can be done with greater economy or effectiveness. So what can be the steps for conducting performance audit? So first of all, identifying the topic whereby you are going to see whether there are certain opportunities or not. Then preliminary study will be conducted, planning will be conducted, execution of audit will be there, and then reporting will be there. So this was with respect to expenditure audit. And students, if you remember that when we were doing duties of auditors, we have studied audit of receipts, audit of stores and inventories, and audit of government companies, whereby I told you that we will be doing that in detail later on. So now we'll be doing that topic. Before starting with audit of receipts, please tell me whether expenditure audit is clear or not. So audit of receipts, audit of stores and inventories, it is really very simple. So Shoaib, Sukanya is saying clear. Others also please reply. So see, audit of receipts. So whatever amount has been received, right? So see, first of all, auditor will ensure such an audit provides for checking whether all revenues or other debts due to the government. So the amount that is going to come to the government in form of taxes or other debts that are due to the government, whether those have been correctly assessed, that is, the calculations are correct, realized, credited to government account by the designated authority. So we are talking about receipts now. So whether all the revenues and other debts due to government have been correctly assessed, realized and credited to government account by the designated authority. Then whether for the above purpose there is what regulations and procedures to ensure the effective check on assessment, collection and proper allocation. So with respect to this, in order to ensure effective check of all these, whether there are rules and procedures. The next point says whether such rules and procedures have been carried out or not. Then the next point says with respect to audit of receipts, to check whether there are adequate checks that are imposed to ensure prompt detection, quick detection and investigation of irregularities. For example, it should not happen that double refunds are given to any citizen or any person. Fraudulent or forged refunds vouchers are being processed. So adequate checks to ensure prompt detection and investigation of irregularities. Then there should be a system of review of systems and procedures, internal procedures, and correct and regular accounting of demand collections and refunds. So basically regular accounting should be there, and there should be review of what systems and procedures to see that the internal procedures adequately secure correct and regular accounting of the demands, collections and refunds, right? And the extent and quantum of the audit that is to be done, it will be determined by whom? By the CAG. So the extent and quantum of audit required to be done and under each category shall be determined by CAG. Is it clear? So this was with respect to audit of receipts. Audit of stores and inventories. So certain, in case of the where the government expenditure is incurred, so certain stores, certain inventories must be there. For example, let's say the road is constructed, so there is a lot, is a lot of inventory. Let's say in the form of cranes, in the form of rollers, in the form of raw materials, है ना? So with respect to that. So first of all, to ascertain whether regulations governing the purchase, receipt, issue, custody, sale, inventory, taking of stores, whether these are well devised and properly carried out. So first point say whether regulations relating to all these things relating to inventory, whether these are devised, that is they are in existence and they are properly carried out. Is it clear? Then again, as we have done with respect to audit of receipts, so deficiencies or defects. So deficiencies in quantities or defects in system. So the purpose of audit of stores and inventory is to bring to the notice of government any deficiency of quantity or the defects in the system of control, right? Now, very general points that the purchases should be what? Sanctioned. They should be economical and they should be as per the rules by the competent authority. Simple. Then the prices paid should be reasonable. They should be an agreement that is shown in the contract. Certificates of quality and quantity, whether these are furnished by the inspecting and receiving units. So all that is to be seen. And then to check the accuracy, correctness, reasonableness of balances of inventory with particular reference to specified norms for level of consumption. So if any excess or idle inventory is there, that is to be seen, and periodical verification of inventory is conducted to ensure their existence. So this was with respect to audit of stores and inventories. Very simple points. Why? Because see, you all have done the various audit procedures or the verification with respect to inventory. So these are the points. You'll see the basis is the same, but more specifically words like your, if you will see here, rules and regulations, economical, right? So whether all these things have been complied with. Audit of commercial accounts. So in order to understand this, see, the public enterprises has been classified under three categories: departmental enterprises, statutory bodies, and your government companies. So government companies are the companies as per Companies Act 2013. So with respect to audit of government companies, the provision of Companies Act 2013 are applied. With respect to departmental enterprises, so which are engaged in commercial trading operations, which are subject to same laws, financial and other regulations as the government departments and agencies. So whatever duties, powers, whatever we have studied with respect to government audit, so all that will be applicable with respect to departmental enterprises. Why? Because these are engaged in commercial trading operations which are subject to the same laws, financial and other regulations at the government departments and agencies. And the second category or the last is what? Statutory bodies and corporations. So under the act whereby such corporations are incorporated, the provisions of that act will be applicable. So these are created by specific statutes, mostly financed by government in the form of loans and grants. So how these will be, the audit of these will be done. So statutory bodies or corporations depends upon the nature and type of statute governing the bodies or the corporation. Government companies का क्या है? We have done that Companies Act, and further section 143 subsection 5, 6 and 7 of the Companies Act 2013 will be applied with respect to the government companies. So is it clear? So now we'll be doing section 143 subsection 5, 6 and 7. Is it clear? Send in your replies. So this is the last topic with respect to your government audit. Reporting procedure is also left, but that is a topic which we have already covered when we did Article 151. So is it clear? So now we are doing section 143, subsection 5, 6 and 7. So see the power to appoint government company auditor. So the power is with what? The CAG. So it says, first of all, the definition of government company is given. I hope you all are aware about this. So in terms of section 135 subsection 5 and 7, section 139 subsection 5 and subsection 7, the CAG, Comptroller and Auditor General of India, shall appoint the auditor under subsection 5 and subsection 7 of section 139, that is appointment of first auditor and the subsequent auditor. Is it clear? And whatever directions are given by the CAG to the auditor, so the directions, just a minute. So the auditor is going to submit the audit report to the CAG. Along with that, specifically mention that what were the directions that were given by CAG to the auditor and what was the action that was taken and what was the impact on the financials and the accounts. So directions, the action taken, and we'll submit a copy of the audit report. This was section 143 subsection 5 of the Companies Act, right? Then section 143 subsection 6, this is with respect to what? Supplementary audit. So who will conduct it? CAG, right? So the CAG shall within 60 days of the receipt of the audit report have a right to conduct a supplementary audit under section 143 subsection 6 subsection A. Right? Subsection 6 clause A of the financial statement of the company by such persons or persons as he may authorize in this behalf. And that person will have the access to the information that is required or as the CAG may direct. This is simple. Then Section 143, subsection 6, clause B, it says that CAG has a right to comment upon or supplement such audit report. So when the audit report is received within 60 days from the receipt of the audit report, CAG shall have a right to conduct an supplementary audit or to get it conducted by persons or persons as the CAG may authorize. Further, to comment upon the supplement such audit report under section 143 subsection 6 clause B, right? And every such comment that the CAG will make, it will be the duty of the company to send such audit report by the company to every person entitled to copies of audited financial statement under section 136, right? So that audit report along with the comments will be sent to every person who is entitled to receive the audited financial statement under section 136. Is it clear? Now we'll be doing test audit, which is what? Section 143 subsection 7. So here the CAG may also direct any person or auditor to conduct what? Test audit. And when such test audit has been directed, provisions of section 19A of the Comptroller and Auditor General's duties, powers and condition of service act 1971, it shall be applicable. Is it clear? Is it clear? Right? And another important point is with respect to any comments that have been made in the audit report or any adverse remark, under section 134 subsection 3, it will be the duty on the board of directors of the company to give an explanation or comments on every reservation, adverse remark or disclaimer contained in the auditor's report and secretarial audit report of the company secretary in practice. Is it clear? Is it clear? So this was with respect to section 143 subsection 5, 6 and 7. Reporting procedures, if you remember article 151 May, we did that the CAG shall report on the accounts of union and each state to the president and governor, and the latter, that is the president and governor, shall cause the report to be led before the legislature. Itna to we have already done. Now, the report should not only be presented to the legislature, but also publicized adequately in order to create proper climate for public opinion for taking the remedial action. So that report will be adequately publicized also. That report will be publicized adequately also. Why? In order to obtain what? Public opinion for taking the remedial actions wherever there are any findings of CAG on which the remedial action needs to be taken. So this is article 151, which we have already covered. So with this, we have covered this government audit. Quickly go through this, test your understanding, question number 1, and send in your replies. Meanwhile, I'll just have a look at your queries. So Rajat Thakkar, the session starts at 3 o'clock. It is 3 to 5:30. Is it clear? Are these topics clear? Go through test your understanding 1. So it is the duty of CAG of India to audit and report on all expenditure from the consolidated fund of India and of each state or of each union territory having a legislative assembly, and to ascertain whether the money shown in the accounts as having been disbursed were legally available, applicable to the service or purpose for which they have been applied, and whether it conforms to the authority. Discuss in above context what is understood by consolidated fund of India. What is it important? Quickly tell me. What do you understand by the term consolidated fund of India? What all is included? Quickly tell me. We have done this topic. So it includes all the revenues of the government of India, remember, from taxes, direct or indirect, all loans taken by the government, or all amounts of repayment. Now, why is it important? So it says that it important lies in the fact that all government expenditure is incurred out of this fund, right? No monies out of consolidated fund of India shall be appropriated except in accordance with the law and for the purposes and manner as specified in the constitution. So all the expenditure that the government incurs is out of the consolidated fund of India. So is the importance of consolidated fund of India. Is it clear? Is it clear? So, students will do one thing. We will take a break of 10 minutes here, and after the break, we'll be starting with. I'll not start with audit of local bodies, Abhi. I'll be starting with audit of cooperative societies. And if the time will permit, we'll do audit of local bodies also. Otherwise, audit of cooperative societies and multi state cooperative societies. So, a quick break of 10 minutes here. Okay, okay. So students, I hope you all are back after the break. See students, in this chapter, I have left one topic which is audit of local bodies. So if the time will permit, I'll cover that topic today itself. Otherwise, I'll just in 10 minutes quickly finish this topic in the next session, which is scheduled for chapter number 10, right? Apart from this, now we'll be starting with audit of cooperative societies, which is on page number, just a minute, 9.59. So apart from audit of local bodies, we have covered all the topics so far till page number 9.59, right? So audit of cooperative societies. See, what is a cooperative society? So basically, a cooperative society is a business organization with special mode of doing business by pulling together all means of production cooperatively, elimination of middlemen, and exploitation from outside forces. So basically, group of people come together, they pool in all their resources, right? So it is a business organization with special mode of doing business by pulling together the means of production cooperatively. Elimination of middlemen, that is buying directly, you can say example, buying directly from wholesalers, and exploitation from outside forces, right? Now, when we will be doing this audit of cooperative society, you will see that we'll be referring to an act which is the Cooperative Societies Act 1912, and which is the Central Act, which is contains the fundamental law relating to formation and working of cooperative societies in India. Right? So we'll be talking about Central Act, and in my notes, I've written the act wherever the Cooperative Societies Act 1912 is to be considered. Right? And it is the Central Act. So in your module, you'll see the term Central Act is used a number of times, right? Now, this is a fundamental law which regarding the formation and working of cooperative societies in India. The various states in our country, they have specific act also, like Maharashtra, West Bengal, they have their specific act for cooperative societies. So there that will be applicable, right? Now, audit as per section 17 of the act. So this act is what? The Cooperative Societies Act 1912. So before that, there is just a small topic on page number 9.59 that, see, a chartered accountant, he can play a role of auditor with respect to cooperative societies. Apart from audit, some other professional services could be rendered by CAs, can be guidance in accounts writing, installation of accounting system, internal audit, management audit, accounting services, and taxation. So this, we are talking about what a CA can do when in terms of cooperative society, what professional services can be rendered apart from auditing. Just a minute. Right? So, audit as per section 17 of the Cooperative Societies Act 1912. So, first of all, the registrar of the cooperative society. So, here registrar means a person appointed to perform the duties of registrar of cooperative societies under this act, right? So, the registrar shall audit or cause to be audited the audit of the society by some persons authorized by him, by a general or special order in writing, accounts of every registered society once at least every year. So audit as per section 17 of the Cooperative Society Act 1912. So registrar shall audit or cause to be audited accounts of every registered society once at least in every year. By whom? By some person authorized by him or general or special order in writing, right? That audit shall include examination of the overall debts along with the valuation of assets and liabilities of the society. Simple. The registrar or the collector or the star is basically any person authorized by him by general or special order in writing. So that the person basically who is conducting the audit shall have the at all the times access to books, accounts, papers, and securities of the society. Further, every officer and the society shall furnish such information relating to transactions and working of society as are necessary for making the inspection and report. Simple. This was section 17. Now relating to qualification of auditors of a cooperative society. So a CA in terms of Chartered Accountant Act 1949, he is eligible to be appointed as auditor of the society, cooperative society. And some of the cooperative society have also permitted person holding government diploma in cooperative accounts, cooperation and accountancy. So that person can also be appointed as auditor, and also a person who has served as an auditor in the cooperative department of a government can be appointed as the auditor of a cooperative society. Is it clear? The appointment. Now, who appoints? So, wherever I mentioned R, it is basically for the registrar. So, the auditor of the cooperative society is appointed by the registrar and he conducts the audit on behalf of the registrar. The report is submitted to the registrar and to the society. So the auditor is going to submit the audit report to the registrar and the society, and the audit fees will be paid by the society. But who will decide it? The registrar, on the basis of statutory scale of fees prescribed by the registrar. Simple. I hope it is clear. Now, with respect to books, accounts, and other records of the cooperative society. So section 43H of the Central Act. Central Act is what? The Cooperative Societies Act 1912. According to this, the state government can frame rules prescribing the books and accounts. For example, in Maharashtra, with respect to the cooperative societies, the books of accounts will include what? The books relating to all sums of money received and expenditure and relating to the matters relating to receipts and expenditure. Books of accounts for sales, purchases of goods by the society, and with respect to the assets and liabilities. Further, additional records can also be maintained. For example, what can be the additional records? The daily cash sales summary register, the register for collection of debtors, if credit sales allowed by bylaws, loan disbursement register, registers relating to recovery of loans from salaries, direct receipts from members, any other columnar subsidiaries. So these are given on page number 9.61. I hope you are finding it easy and very easy to understand also. So I'm just giving it a quick revision to these points. Now, with respect to restriction on shareholding, again, an important question from your examination point of view. So you may get a 3-mark question that what are the restrictions on shareholding as per the Cooperative Societies Registration Act. Cooperative Societies Act 1912. So section 5 of the Central Act, that is Cooperative Society Act 1912, it says that the society where the members, the liability of members is limited, in respect to that society, no member of the society other than registered society can hold such portion of share capital of the society as would exceed a maximum of 20% of total number of shares or the value of shareholding exceeding rupees, value of shareholding to rupees 1,000, right? So any member of the society, so we are not talking about registered society abhi, so no member of the society can hold such portion of share capital as would exceed 20% of the total number of shares, right? So what is the duty of the auditor? Auditor will watch of any breach relating to the holding of shares. Breach is where any such rule is not followed. And auditor will watch whether any provisions in bylaw of the society is not contrary to this provision as is given in the Cooperative Society Act 1912. Is it clear? Is it clear? So with respect to cooperative societies, we have done what? The audit as per section 17 of the Act. Then we did what? Qualification of auditor, appointment of auditor, books of accounts that are required to be maintained, additional records, and then restriction on shareholdings. Then is restriction on loans that are taken by the or that are made by the society. So see, first of all, section 29 of the Cooperative Societies Act 1912, it says that the registered society shall not make loan to any person other than a member, because this is for the benefit of the cooperative members who have formed the society. But A special sanction may be obtained from the registrar, whereby the loans are given to another registered society. And the state government may further put restrictions so as to ensure that it is in the interest of the society and the members. So first and foremost, section 29 says that registered society shall not make loan to any person other than member. However, if any loan is to be given to another registered society, special sanction for registrar is required, and further the state government may put further restrictions in interest of the society and the members. Now, with respect to the borrowing, section 30 says that the registered society shall accept loans deposits from persons who are not the members, subject to restrictions and limits of the bylaws. An auditor has to examine such bylaws. Is it clear? Investment of funds. Section 32 says that the society may invest its funds in any or one or more of the following. So again, another 4-mark question you may get on this topics, that what are the funds whereby the societies registered under your Cooperative Society Act 1912 can invest. So the funds may be invested in central or state cooperative bank, any security specified in section 20 of the Indian Trust Act 1882, shares, securities, bonds, debentures held in any other society with limited liability, any cooperative bank other than one is what? This central or state cooperative bank approved by the registrar in pursuance of the terms and conditions that have been applied, and any other monies that are permitted by CG or the SG. So any other investments that the CG and SG have permitted. So these are the 5 investment of funds option that are given to a society in terms of section 32 of the Cooperative Society Act. Is it clear? The next topic is related to appropriation of profits, right? So basically, certain percentage is to be transferred to the reserve fund before distribution as dividend or bonus to members. So section 33 says that that a prescribed percentage of profit should be transferred to reserve fund before the distribution as dividend or bonus to the members. Is it clear? Is it clear? Contribution to charitable purpose. So you may get a question that so and so is the society which is registered under Societies Act, Cooperative Societies Act 1912. So what are the provisions relating to contribution to charitable purposes? So the provisions are contained in section 34. So the registered society may, with sanction of the registrar, contribute an amount for the charitable purpose, but not exceeding 10% of net profits remaining after compulsorily transfer to reserve fund for any charitable purpose. So not exceeding 10% of net funds which are remaining after the compulsory transfer to the reserve fund. Compulsory transfer as we have done here. Okay, is it clear? So these are very simple topics. That is why my speed is a little bit faster for these topics. Quickly tell me whether these topics are clear or not. Prithviraj, Swati, Sukaina is saying yes, ma'am, clear. Others also please reply. Rajat Thakkar, Shoaib is saying yes, ma'am, clear. Sunil Ganga Devi is saying clear. Swati reply. Prithviraj is saying yes, ma'am, clear. So I hope you are able to learn also. So Swati, I hope the topics that you have that we have discussed after you joined are clear. So she's saying yes, ma'am, it is clear. So investment of reserve fund outside the business or utilization as working capital. So the reserve fund that we have talked in the earlier topic. So the funds out of that, whether can that fund be used outside the business or that should be utilized as working capital. So it says that, let me just tell you the page number. We are on page number 9.63 of your module. So it says that Some of the states may provide that the reserve fund may be used in business of society as working capital as per the rules made in this behalf, or it may be invested as per the provisions of the Cooperative Societies Act, as we have seen, or it may be used for some public purposes likely to promote the object of the society. So what is the duty of the auditor? The auditor has to ensure whether there is strict compliance with the stated act or rules in this regard, right? Simple. So the reserve fund can be used in business of society as working capital as per the rules made in this regard. It can be invested as per the provisions of the act, and it can be used for some public purpose likely to promote the object of the society. The auditor has to ensure that there is strict compliance with the state act and the rules. Simple. Then the next topic is relating to contribution to education fund. So the societies needs to contribute annually towards the education fund of the state federal society at appropriate rates as per the class of societies. And such contribution to to the education fund, it is a charge on profits and not an appropriation. Is it clear? So this was contribution to education fund. Now we have a topic in the module which starts from page number 9.64, and this is special features of cooperative audit. So students, these small points like this consist of, I think, let me just check, 10 sub-points, these special features of cooperative audit. So you may get a 3-mark question as to the examination of, let's say, the overdue debts, right? So these 10 points are really very important. These are the special features of cooperative audit. So the special features of cooperative audit to be borne in mind in general while conducting the audit. So when the auditor is conducting the audit with respect to the examination of overdue debts, auditor will see that the overdue debts for the period from 6 months to 5 years and more than 5 years are classified, and they are to be reported by the auditor. So the overdue debts from a period of 6 months to 5 years and more than 5 years, auditor is going to classify them and report, these are to be reported by the auditor. Why? Because see, such overdue debts, they are going to affect the working capital position. If the debts are not been received, let's say they are due for more than 5 years. So this will have to see now whether it is bad or not, whether it is recoverable or irrecoverable. So it is going to affect the working capital position. And the further analysis of these overdue debts is required in order to ensure the chances of recovery, or whether these are to be classified as good or bad, right? Whether proper provision for doubtful debts have been made and whether such provision so made is satisfactory or not. So auditor is going to consider all these things when he is examining the overdue debts. So as I told you, you may get a 3-mark question on this point, that the auditor's duty with respect to examination of overdue debts. So first of all, classification and reporting with respect to overdue debts from 6 months to 5 years and more than 5 years. Why? Because it affects the working capital position of the society. Further analysis is required in order to ensure the chances of recovery, whether the same is to be classified as good or bad, and whether proper provision for doubtful debt is made and the provision so made is satisfactory or not. So this is with respect to examination of overdue debt. Now, overdue interest, right? So what is meant by overdue interest? First of all, let us just see this point, that the interest accrued in the accounts with respect to the principal is what? Overdue interest. So the overdue interest should be excluded from the interest outstanding and accrued due while calculating the profits. So while calculating the profits, when the interest outstanding or accrued is considered, this overdue interest should be excluded, right? And why? Because for this overdue interest, a reserve is required to be created, right? So the amount that is transferred to the reserve, that should be reduced from the interest outstanding when the profits are calculated. So this is with this respect to overdue interest. Then certification of bad debts. So one important, or you can say peculiar feature, interesting feature with respect to Maharashtra state cooperative rule is that a bad debt can be written off as bad only when the same has been certified as bad by the auditor. Certification of bad debts, right? So a bad debt can be written off only when the same is certified as bad by the auditor, right? Now, the bad debts or the irrecoverable losses before being written off against the bad debt funds or the reserve fund, these should be certified by the as bad debts or recoverable by the auditor wherever the law requires. So, as in the case of Maharashtra Cooperative Society rules, the law requires that the auditor needs to certify them as bad. However, if no such requirement is there in the law, then the managing committee must authorize the write-off. So we are talking about what? The certification of bad debts. So they can be considered as bad and thereby they can be written off only once they have been certified as bad by the auditor. Example as is contained in Maharashtra State Cooperative rules, right? But if the law is silent on this regard, then the managing committee must authorize them to be written off. Is it clear? So the third point is with respect to certification of bad debts. Then valuation of assets and liabilities. Students, this is again a very easy, simple point and your understanding of chapter number 5. See, it says as such in the act, there is no specific provision or instruction under the acts or rules with respect to valuation of assets and liabilities. So the regard has to be given to general principles of accounting and auditing. So you all know what all assertions are checked. So auditor to ascertain. So we are talking about what? The assets and liabilities, the existence, ownership, valuation of assets. So fixed assets will be valued at cost minus depreciation, and any incidental expenditure with respect to asset acquisition or installation expenditure will be capitalized. The current assets like your inventory will come at cost or market price, whichever is lower. Any liability, if it is a known liability, then it will be brought in the books of accounts. And if it is contingent, the same shall be shown by way of notes. Now, students, many students have a tendency to leave this chapter. Now, tell me if you get a question that you are conducting the audit of a cooperative society, what are the various special features of the cooperative audit with respect to valuation of assets and liabilities? So for all those who have just gone through the chapter once, I'm sure they will be able to write this answer in the way it is required in the exam. Because these are so general points. But yes, in order to write what is expected out of you, reading the module once or reading this topic once is absolutely required. So tell me, is it clear? Swati is saying ownership deeds. Yeah, that is all correct. But tell me, is this topic clear? Because chapter number 5, may you have done all these things in detail. So Swati is saying yes. Others also please reply. Quickly send in your replies. Sukanya is saying yes. Prithviraj saying yes. Chalo, good. So please, student, this is important chapter. You are not supposed to leave it in any case. Adherence to cooperative principles. So see, what is the duty of the auditor, or what is the special feature of cooperative audits, or what the auditor has to consider when he is conducting the audit with respect to adherence to cooperative principles. So the auditor has to ascertain whether the objects of the society are achieved. And the object is not only in terms of profits, but also extending the benefits to the members, but also obtaining the social benefits, whether the sales are affected at lower prices. So auditor will see all these things. So not only the profits, but whether society के लिए, members के लिए the benefit has been done or not. The auditing expenses, auditor is going to audit the expenses whether these are economically incurred and there is no wastage of funds. Very simple. And if you remember, the cooperative principles were middlemen communication is to be avoided, commission is to be avoided. Purchases should be made directly from the wholesalers. When we did the definition of term cooperative society, so if you remember, let me just take you through that definition so that you can create a link. Just a minute. So see, cooperative society is a business organization with a special mode of doing business by pulling together all the means of production cooperative, elimination of middlemen and exploitation from the outside forces, right? So now let us just see cooperative principles, adherence to cooperative principles topic. Just a minute. So audited to ascertain whether the objects of the societies are achieved, that is not only in terms of the profits, but also extending benefits to members and social benefits, and like whether sales are affected at lower prices. Auditor will audit the expenses, whether these are economically incurred and there is no wastage of funds. The middleman commission, whether the same is avoided. Purchases are made directly from the wholesalers, and principles of proprietary audit. Proprietary audit. Tell me, give me the keywords with respect to proprietary audit. We have done it just now when we did the topic government audit. Quickly send in your replies. Quickly, I need your answers. Proprietary audit. Yes. Sukaina, correct. Prudent is the word that you should use. Others. So basically, the public officers, if we talk about proprietary audit in terms of the government audit, so it was basically that the public officers, they exercise the same degree of vigilance in respect of the expenditure out of the public monies as the person of the ordinary prudence would have exercised in respect of expenditure of his own money. Yes, Propriety is saying using one's own evidence funds. So proprietary audit. So the society's funds have been incurred. So the it should be incurred in a manner so that the person of an ordinary prudence would was exercised with respect of his own funds. Right? Is it clear? Then is observation of provisions of the act and the rule. So when the auditor is conducting the audit, with respect to the cooperative society, so auditor will point out any infringement or you can say breach with the provision of Cooperative Society Act, the rules and the bylaws. And the financial implications of any infringement, the auditor will assess that and auditor is going to report that. For example, auditor should note whether there is any restriction on the payment of dividends by the society. So basically, and whether the same has been paid. If there is any restriction, though the same should not be paid. So this point basically says that the whatever are the provisions of the Act, the Cooperative Societies Act 1912 and the rules that are made in this regard. So whatever are the provisions, whether the same has been complied with or not. So first point says the auditor will point out any infringement with the provisions of Cooperative Society Act plus the rules and the bylaws. And he will assess and report any financial implication with respect to that infringement. And for example, if whether there is a restriction on payment of dividends. So the same should be noted by the auditor. So this is with respect to observation of provisions of acts and rule. Verification of members register and examination of their passbook. So auditor will examine the entries made in the members passbook, the loans given to the members, entries with respect to the repayments, confirmation of the loan balance. Chapter 5 का कुछ understanding use हो रहा है? Yes. He will ensure that the books of accounts are free from manipulation. In case of rural agriculture credit societies, since the members are not literate, when the auditor verifies the member register, it is good and it acts as a safeguard for those members. So auditor is going to examine the entries in the member's passbook, the loan given, the entries with respect to repayment and confirmation of the loan balances he'll obtain. He'll ensure that the books of accounts are free from manipulation, and in case of rural, agricultural or credit societies where the members are not literate, it is a good and it is a safeguard for the members when the auditor verifies the member register, right? And obviously, such checking will be on test check basis, which depends upon the auditor's professional judgment. Simple. Next point is special report to the audit registrar. So if the auditor noticed that there are any serious irregularities in the working of the societies, he shall report to the registrar, drawing his specific attention to take necessary action against the society. So if during the course of audit, auditor notices that there are serious irregularities in the working, he shall report to the registrar, drawing his specific attention. Why? So that necessary action can be taken against the society. And in the following 4 cases, special report is necessary. When auditor finds that there is personal profiteering by members of managing committee detrimental to the interest of the society, that is, the members of the managing committee, they are making their own profits, personal profiteering, अपना ही फायदा कर रहे हैं, which is detrimental, which is not in the interest of the society. Detection of fraud with respect to expenditure, purchases, property or stores. Examples of mismanagement, decisions against the cooperative principles. For example, let's say that one of the cooperative principles or one of the rules that was given in the rules is that the dividend is not to be paid. However, the dividend has been paid. So this is what decision against the cooperative rules, right? Further, urban cooperative banks may, if there has been disproportionate advances, deliberate negligence in recovery or reckless advancing. So disproportionate, so it is, let's say to one section of the society, majority of the loans have been given. Or deliberate negligence in recovery, no steps have been taken to recover the loan. Reckless advancing, without considering the security, without considering the credit worthiness of the party, the loans have been given. So in these cases, special report is necessary. That is personal profiteering by members of managing committee, detrimental to the interest of society, detection of fraud, in case of expenditures, purchases, property, stores, example of mismanagement, decisions against cooperative principles, and urban cooperative banks. These are what disproportionate advances, deliberate negligence in recovery, and reckless advancing. Audit classification, again a very important topic. You may get a 3-mark question. Audit classification of society. See, after the judgment of overall performance of the society, so once the auditor has considered the overall performance of the society, auditor, so it is not the registrar, it is the auditor, is going to award a class to the society based on the criteria which is specified by the registrar. Simple. However, if the management is not satisfied with the class, it may make a claim, it may make an appeal to the registrar, and then the registrar will direct the auditor to review the audit classification. So auditor needs to be very careful when he is giving any class to the society. Simple. Audit classification of society. So after the judgment of overall performance of society, auditor is going to award a class to the society based on the criteria which is specified by the registrar. However, if the management is not satisfied with the class so awarded, it can make appeal to the registrar, and on such appeal, auditor, the registrar may direct to review the audit classification. So the auditor needs to be very careful. And the last point with respect to special features of cooperative societies, discussion of draft audit report with managing committee. So this, though, you have seen when we were doing the statutory audit with this, whereby we saw that any wordings, any draft report that is, any audit report that is to be given. So first of all, communicate with those charged with governance, right? So same way it says that on conclusion, the auditor shall ask the secretary of the society to convene the managing committee meeting to discuss the draft audit report. So on conclusion, so any audit report that is to be issued, first of all, it will be discussed with the managing committee. So ask the secretary to convene a managing committee meeting to discuss the draft audit report. And audit report will never be finalized without such discussion. Why? Because if there are any minor irregularities, they may be selected and rectified after discussion with the managing committee. And the matters of policy, relating to the matters of policy, that will require the detailed discussion, for which the meeting needs to be convened. Is it clear? So discussion of draft audit report with the managing committee. So you may get a question that you are conducting the audit of so and so society, and as an engagement partner, you are of the opinion that the audit report can be finalized without discussing it with the managing committee. So the answer is no. Why? Because no audit report can be finalized without discussion, so that minor irregularities may be selected and rectified, and matters of policy will require what detailed discussion. So what is the solution? So I will ask the secretary to convene a managing committee meeting to discuss the draft audit report. So with this, we have finished the audit of cooperative society. Now students, I need your answer. Is this topic clear to you? And after I get the replies from you, I'll be starting with audit of inquiry and inspection of multi-state cooperative societies. Quickly send in your replies. So Prithviraj, you may not go in detail of this. Whatever is required for the purpose of your intermediate exam, and since these are revisionary classes, so we will restrict to whatever is given in our module. Is it clear? Sunil, Gangadev, Sukaina, Swati are saying clear. Prithviraj, is it clear? ठीक है. Now, multi-state cooperative society. So what are multi-state cooperative societies? So basically the cooperative societies whose objects are not confined to one state. So multi-state. And here the act that will be applicable is Multi-State Cooperative Society Act 2002. Is it clear? And one important point with respect to multi-state cooperative societies, that its funds cannot be used for the political purpose. Right? Now you will see that more or less the topics that we are going to cover with respect to multi-state cooperative society, these are the same as we have studied with respect to cooperative societies also, right? For example, if you remember books of accounts, so these will be with respect to sum of money received, expended, or the matters with respect to sales and purchases of goods, with respect to assets and liabilities, remember. And in case the society is engaged in production, processing, and manufacturing, utilization of machinery, material, labor, other items of cost as specified by the bylaws of the society. This is an additional point. Otherwise, these are the 3 points that we did earlier also. So with respect to the books of accounts, all sums of money received, expended, and the matters, related matters, all sales and purchases of goods, the assets and liabilities, and societies engaged in production, processing, manufacturing. So in case of those societies, utilization of material, labor, other items of cost as specified by the bylaws of the societies that are to be made, right? Now, the various points with respect to audit of multi-state cooperative society. So this topic is on page number 9.68 of your module. So students, we have covered all the topics till page number 9.68, except for the topic of local bodies that I'll be taking up in the next session, if today we are not able to complete it, right? Qualification of auditors. So again, section 72 of the Multi-State Cooperative Society Act 2002. So it can be a chartered accountant. And who is not eligible? So the following persons are not eligible: a body corporate, an officer or employee of multi-state cooperative society, a person who is a member or employee of officer or employee of multi-state cooperative society, a person who is indebted to the multi-state cooperative society or has given guaranteed or provided security for the indebtedness of third party to multi-state cooperative society for an amount exceeding rupees 1000. Tell me, have you done this topic in your Companies Act? Quickly tell me. In your Companies Act 2013? Yes. What is the section? Shoaib is saying yes. Swati is saying yes. Yes, Shoaib, correct. 141, right? Section 141. So a few points from that section. So this is the same. Further, if any qualification is attracted after the appointment, it shall be deemed to have vacated the office as such of the auditor. Simple. Appointment of auditors. So the provisions are contained in section 70 of the Multi-State Cooperative Societies Act 2002, and it says that the first auditor or the auditor shall be appointed by the board within 1 month of the date of registration, and who shall hold office until the conclusion of first AGM. If the board fails, the Multi-State Cooperative Society is going to appoint the auditor in the general meeting. Clear? Powers and duties of auditors. Now your understanding of chapter number 8. So the provisions are contained in section 73. So what will be the powers and duties? Your understanding of chapter number 8 will be helpful here. Section 143, right? So see the powers and duties of auditor. It says that the auditor will have a right to access at all times to books, accounts, vouchers of multi-state cooperative society, whether kept at head office or elsewhere. And the auditor may require from officers or employees such information explanation as he may consider necessary, right? Further, section 73 subsection 2 says the auditor shall make the following inquiries. Students, tell me, in chapter number 8, we have done a topic with respect to inquiries. What is the relevant section number? Quickly send in your replies. And I can say there, the students, I remember the name Shoaib, you were there in when we did chapter number 8. Swati, you were there. Then Sukaina, you were there. Sunil Gangadev, you were there. Tell me the section, subsection also, Shoaib and Swati. Inquiries, I'm talking about inquiries. Yes, Swati, correct. 143, subsection 1. So, with respect to powers and duties of auditors, and if you remember, we did section 143, subsection 3 also, whereby we saw that the auditor shall report. But with respect to inquiries, no reporting was required unless he has certain special comments to make. Remember? So, section 73 says that the auditor shall have a right at all the times to books of accounts, vouchers of multi-state cooperative, whether kept at head office or or elsewhere, and he may require from officer or employees of such information explanation as he may think necessary. Further, section 73 subsection 2 requires the auditor to make the following inquiries, and the student's point number A, B, E, F of section 143 subsection 1, that is given on page number 8.68, are the relevant points that are to be covered here. So let me just take you through the module, page number. This is 9.69. So see, powers and duties of auditors. So section 73 says whether loans and advances made by multi-state cooperative society on the basis of security are properly secured, and the terms on which the loan has been given are not prejudicial to the interest of multi-state cooperative society or the members. Whether the transaction of multi-state cooperative society which are represented by book entries are not prejudicial to the interest of the multi-state cooperative societies. Then whether personal expenses have been charged to revenue, and if it is stated in the books and papers of multi-state cooperative society that shares have been allotted for cash, whether the same has actually been allotted, and if the same has not been, cash has not been received, the position should have been stated and the balance sheet should be correct and not misleading. So your point number A, B, E, and F are also the inquiry points for the auditor of multi-state cooperative society. Is it clear? Then the content of auditor's report. So it says that Section 73, subsection 3 and subsection 4, it says that the auditor shall report to the members on the accounts examined, balance sheet, the profit and loss, and on every other document next to balance sheet or profit and loss, which is laid before the multi-state cooperative society in general meeting. Very simple point. The report shall state that in his opinion and to the best of his information according to explanation given to him, the given information required gives a true and fair view. Again, a very simple point. So when we are doing multi-state cooperative society, you must be thinking now that it is just a replica of various points, or it is just a repetition of various points that we have already covered somewhere or the other in the earlier chapters that we have done, right? And the balance sheet, so auditor will say that whether the balance sheet gives a true and fair view of the society's affairs as at the end of the financial year, and whether P&L gives a true and fair view of the P&L for its financial year, and shall also report. Now your understanding of chapter number 8, one shall also report. The reporting is to be given with respect to 4 points that are given in on your page number 8.69 of your module, and also in this topic. So see, the auditor shall also state, so I am on page number 9.70. Just a minute. So whether the auditor has obtained all the information and explanation which to the best of his knowledge and belief were necessary for the purpose of his audit, whether in his opinion proper books of accounts are kept, and whether the books of accounts and proper adequate returns for the purpose of his audit has been received from branches not visited by him, whether the report on accounts of branch office has been received and forwarded to him and he has dealt with the same in preparing his audit report, and whether the multi-state cooperative society's balance sheet and profit and loss dealt with the report are in agreement with the books of accounts. Where any of the matters have been answered in negative or a qualification, the auditor's report shall state reason with respect to that for the answer. Is it clear? Is it clear? Is it clear, students? Are you able to link it with chapter number 8? You should be able to, because then only you will get confidence that, okay, I remember whatever I have done in earlier chapters. Now, power of central government to direct special audit in certain cases. So the powers are, the provisions are contained in section 77 of Multi-State Cooperative Societies Act 2002. So where the central government is of the opinion that the affairs of the society, multi-state cooperative, are not managed in accordance with the prudent commercial practices, or the CG is of the opinion that it it is managed as it would cause injury to the interest of the trade or the industry or the business, or the CG of the opinion that the financial position is such as it would endanger the solvency of the entity of the multi-state cooperative society. So when can the CG order the special audit? So three situations are there. When CG is of the opinion that the affairs of multi-state cooperative society are not being managed in accordance with self-help, mutual deed, cooperative principles or prudent commercial practices, or with sound business principles. So any purchases, if these are made at a very high prices, any sales, these are made at a very low sales, though they would have though such purchases would have been done at a lower prices, or sales would have been done at a higher prices. So sound business principles nahi hai na, prudent commercial practices nahi hai na, or that multi-state cooperative society has been managed in a manner likely to cause serious injury or damage to the interest of the trade, industry or business which it pertains to, or that the financial position of multi-state cooperative society is such as to endanger its solvency. So in such a situation, the central government may direct the special audit. The provisions are contained where section 77 of Multi-State Cooperative Society Act 2002. The CG may direct at any time by order special audit for the period or periods as may be specified in the order. Who will conduct such audit? So CG may appoint any chartered accountant or the auditor of the multi-state cooperative society. So the existing auditor or the CG may appoint separate chartered accountant as an auditor. for conducting this special audit. However, such special audit can be ordered by the CG only if the CG can order the special order only if the central government or the state government, either itself or both, like either the CG or both CG and SG, they hold 51% or more of paid up share capital in such multi-state cooperative society. So then only CG may order such special audit, right? What will be the special auditor's powers, duties and reports? So the duties and powers shall be same as the auditor of the multi-state cooperative society. A change will be there that instead of making report to the members of multi-state cooperative society, the report in this case will be made to central government, the person who is appointing the special auditor. And it shall include all the matters that we have discussed above in section 73, plus the matters that are directed by the CG. Very logical. Anna? So don't just cram these things. Just try to understand. I'm sure you will be able to write these in your examination. Now, what will be the action by CG? On receipt of the report, the CG shall take such action as it considers necessary, right? However, if no action is taken within 4 months from the date of receipt, so CG is not taking any action within 4 months from the date of receipt, then CG will send the report to the multi-state cooperative society. The report that CG has received from the auditor, special auditor, CG will send it to multi-state cooperative society. And the multi-state cooperative society will either send a copy or relevant extract of the report along with the comments, or require the multi-state cooperative society to circulate that copy or extract to the members or read before the multi-state cooperative society at its general meeting, right? Further, the expenses pertaining to special audit, any incidental expenses or remuneration of special audit, it shall be determined by CG but paid by multi-state cooperative society. And in case of default or such payment, the same will be recoverable from multi-state cooperative society as the arrear of land revenue. Is it clear? So as such, nothing new when we read about the audit with respect to multi-state cooperative society. Somewhere or the other in the chapters that we have covered, you will see that the provisions are almost the same, right? So the next topic is inquiry by central registrar under section 78 and inspection of MSCS under section 79, that we'll be doing from the module. So the topics are given on page number 9.72. Students, these are the revisionary classes, right? So the purpose is to make you revise the entire chapter. So my endeavor is here to cover the maximum topics, and that is why the speed you will find a little bit faster as compared to the routine LVC classes, because these are what the revisionary classes. And I always try to cover the entire chapter. Still, if I find that there is paucity of time and any simple topics there, that only I give you as a homework to read. And that too, we can always discuss. If you have any query, you can discuss that in the next session that is scheduled for, even though for the next chapter also. So inquiry by central registrar under section 78. So this is section 70 is with respect to inquiry, and section 79 is with respect to inspection. So you will see that once we are clear with the inquiry, you will see more or less the points with respect to inspection are also the same. So let us just do this from your module. Shoaib is saying clear. Others also please reply. Till page number 9.72, we have covered this entire chapter except for audit of local bodies, municipality. So tell me, is it clear? Shoaib is saying clear. Others also please reply. Swati, Sukaina, Sunil Gangadev, Prithviraj. Sukaina saying yes. That's good. So inquiry by central registrar under section 78. Okay. So when can this inquiry be done? So the central registrar may, on a request from these three, may order what? That an inquiry be conducted in terms of section 78. So, on a request from a federal cooperative to which multi-state cooperative society is affiliated, or a creditor, or not less than one third of the members of board, or not less than one fifth of the total members of the multi-state cooperative society. So if the federal cooperative to which this MSCS is affiliated, or a creditor, a single creditor, or not less than one third of the members of the board, or not less than one fifth of the members of multi-state cooperative society, if any request is received, the central registrar may ask for what? May order for inquiry under section 78. So what the registrar may order? Central registrar may order to hold an inquiry. So the central registrar may hold an inquiry or direct some person authorized by him by order in writing in this behalf to hold an inquiry into the constitution, the working, the financial condition of a multi-state cooperative society. So again, here also I like to tell you that these words, na, constitution, working, financial conditions, are repeated in this topic again and again. So devote your energy in learning this. So the central registrar may hold an inquiry or may direct some other person authorized by him by order in writing in this behalf to hold inquiry into the constitution, into the working and financial condition of MSCS, right? But before holding such an inquiry, 15 days ka prior notice will be given. So however, before holding such inquiry, 15 days notice must be given to MSCS that we are going to hold an inquiry, right? So what are the powers? The central registrar or the persons authorized by him shall have the following powers. So what are those? See, very simple powers. They shall have at all reasonable times free access to books of accounts, documents, securities, cash, other properties belonging to the custody of the multi-state cooperative society. And with respect to this point, they may summon any person in possession or responsible for the custody of books, accounts, documents, cash, or other properties to produce at such places specified by him. So first of all, reasonable access, free access at all reasonable times to books of accounts, properties belonging to or in the custody of MSCS. And if there is a person who is having the custody of all these things, to summon that person at any place specified by the registrar or the person so appointed. Simple. Then to call for a general meeting of the society by giving a notice of not less than 7 days. So 7 days ka notice to dena hi hoga. At such time and place will be what? The headquarters of the society. To consider such matters as may be directed to him, and where the officers of the society refuse or fail to call such meeting, then he shall have the power to call himself. So he may himself send the notices to the members that the meeting is convened, but 7 days prior notice is to be given, right? So here the power to summon was relating to the possession of the books account. So the person who is in custody of books and accounts. Now the C point is may summon any person who is reasonably believed to have the knowledge of the affairs. So first point it was relating to a person who is having the custody of property or the papers or the books of accounts. But here who is having the knowledge of the affairs of the MSCS to appear before him at any place, and the place is what? Headquarters of the society or any branch thereof, and may examine such person on oath. Again, a very important thing, to examine such person on oath. Clear? And last is the follow-up, that is the central registrar shall within a period of 3 months of the receipt of the report communicate the report of inquiry to the financial institution where the society is affiliated, the person or authority at whose instance the inquiry is needed. So the report will be given to the MSCS, the society, then the financial institution or where the society is affiliated, and lastly the person on whose request the inquiry has been done. Is it clear? So this is with respect to inquiry under section 78. So central registrar may on a request from 3 persons, federal cooperative bank, federal cooperative to which multi-state cooperative society is affiliated, or a creditor, or not less than one-third of the members of the board, or not less than one-fifth of the total members of the multi-state cooperative society. Central registrar may hold an inquiry or may direct some person. An inquiry will be in constitution, working, financial condition of the MSCS. Opportunity of being heard, 15 days prior opportunity will be given. Further, the powers are at all reasonable time, free access to books, plus summon the person who is having custody of books, accounts, documents, securities, all these things. Then to call for a general meeting, but 7 days notice is required at the headquarters. And where the officers of the society refuse to or fail to call such meeting, then by himself he can call the meeting. And to some one person who is reasonably believed to have any knowledge about the affairs of the MSCS, right? And to examine such person on oath. Follow up may, within a period of 3 months, the central registrar shall communicate the report of inquiry to the MSCS, the financial institution whereby the society is affiliated, and the person on whose request the inquiry is done. Now, if you'll just have a look at inspection of MSCS under section 79, you will see that these are exactly the same. The central registrar may, on request from federal cooperative to which multi-state cooperative society is affiliated, creditor, not less than one-third of the members. So creditor is mentioned here, Hana? Not less than one-third of the member of the board, or not less than one-fifth of the members. How? By special auditor in order in writing to inspect or direct any person authorized by him in writing in this behalf. Opportunity 15 days. Same hai na? Powers available. So the powers are the same. What is the difference? Here, the power is to take into custody the books of accounts also. Right? We are on page number 9.74. And another power is to verify the cash balance of the society. The rest all is the same, right? And the inspection report, a copy of the report of the inspection under this section shall be communicated to MSCS within a period of 3 months from the date of completion of the inspection. Is it clear? Is it clear? So the next topic that we are going to cover is audit of trust and society. Student, these points now almost these are the same as we have done with respect to charitable institution. So you will see that section 8 of Companies Act की बारे में बात हो रही है, Income Tax Act 1961, the FCRA Act 2010. So these are the same. ठीक है. So and books of accounts, very simple points, financial statement, auditor responsibility, almost very simple points. So specific points for trust and specific point for your societies that this we will discuss. So here we are not talking about cooperative societies, wo to we have done, and same way multi-state cooperative society. So I'm on page number, so we are not talking about MSCS also. So page number 9.79 में I'm discussing the points specific to trust and society. So societies के लिए see the auditor's consideration will be what all the auditor is going to consider: the governing legislation of the society, whether it is Society Registration Act 1860 or the applicable state law, right? Then the object of the society. So auditor will see the memorandum of association or the bylaws. So whether charitable activity hai, social hai, cultural hai, educational activity hai. Then whether FCRA, Foreign Currency Regulation Act 2010 में they are registered in case foreign contributions are received, right? Income Tax Act 1961 में whether they are registered in order to get what? The tax exemption, right? Then he'll obtain understanding of what the internal control. Simple. Then evaluate the appropriateness of accounting policies with reference to donations and grants, right? If any expenditure has been incurred from the reimbursement and the same has been reimbursed by donors, then how they are recognized in the financial statements. If any inquiry has been held by registrar, right, with respect to the working of financial condition, then the implications for the auditor's opinion, right? Ascertain all cases of irregular, illegal, improper expenditure or failure or omission to recover monies. Ascertain whether such expenditure or waste was caused in consequence of breach of trust or misapplication or misconduct on part of governing body. Simple points. Basically, summary of whatever we have done, but more specifically with respect to what societies. ठीक है. Now let us just quickly have a look 2 points relating to trust. After doing this topic, we would have completed the entire chapter except for local bodies wala point that for sure I'll take up in the next session. Still, if we are left with time today, I'll try to complete it today itself. So trust. The auditor has to ascertain. See, with respect to trust, we are on page number 9.77. So whether accounts are maintained regularly in accordance with the provisions of the applicable act, receipts and disbursements, whether these are correctly shown, simple, and these are as per the objects of the trust, whether the cash balance are vouchers that are in the custody of manager, whether these are in agreement with the accounts, simple, whether all books, deeds, amounts, vouchers, these are produced before him. So basically everything has been shown to the auditor, right? Then register of movable, immovable properties, whether the same is maintained, right? And any defects or inaccuracies mentioned in previous audit report have been duly complied with and rectified. Whether the manager or trustee or any other person required by the auditor to appear before him and whether the necessary information has been provided or not. Whether any property or funds of the trust were applied for objects or purpose other than the object or purpose of the trust. Then the amounts outstanding for more than 1 year and the amounts written off in any. Whether monies of the public trust has been invested contrary to the provisions of the applicable act. All cases of irregular, illegal, improper expenditure or failure or omission to recover monies or other property belonging to the public trust. Whether maximum minimum number of trustees is maintained, whether meetings are held regularly as required in such instrument, that is in the trust deed, let's say. The minutes book of the proceedings, whether the same is maintained, when any trustees have any interest in the investment of the trust, whether any trustee is the debtor or creditor of the trust. Any anonymous donation, whether the same has been received, how the same has been dealt in the books of account, and whether the trust is receiving any cash donation in cash, it should be within the prescribed limit of accepting the cash donations. Whether irregularity is pointed out by the auditors, whether these have been in the previous year, whether they has been duly complied with or not. Any special matter which the auditor may think it is necessary to bring to the notice of the deputy or the assistant charity commissioner. Simple topics, but a reading once or twice is necessary, right? Now, with respect to municipality, so the topic that I was telling you, we have 4-5 minutes. Let us try to complete that also. So, meanwhile, send in your replies whether this entire chapter, except for the topic local bodies, whether the entire chapter is clear or not. We have covered both the entire chapter in 2 sessions. So whether it is clear or not. Audit of local bodies, which is given on, let me just tell you the page number. The page number is 9.22. Let me just have a look at your chat. So Swati is saying yes, Sukaina is saying yes. Others also please reply. See now what is so we are doing audit of local bodies, which is the last topic which is left for this chapter. See, what is a municipality? So municipality is a unit of local self-government in an urban area. And it can be basically administration of a locality. And what can be an administration? Any village, any town or city, or any area smaller than that of a state. So we're talking about municipality, which is basically a unit of local self-government. And how do you define a locality? A village, a town or city, or any other area smaller than a state, right? Now, such municipality is represented by local inhabitants. Further, they possess fairly large autonomy, that is, they exercise their powers on their own, right? raising at least a part of their revenue through local taxation, and spending its income on services which are regarded as local and therefore distinct from state and central services. Simple. So this is basically the definition part as to what is meant by municipality and what is meant by a locality, and uh, key features like from local taxation they get the major revenue, and the services on which such amount is spent it can be what? General administration and revenue collection, public health, public safety, education, public works, and other such as interest payments. Simple. These municipal authorities, these have specific local functions covering regulatory function, maintenance function, and development activities. Simple. And there are 5 distinct types of urban local authorities. So these municipal government can be in the form of municipal corporations, your municipal councils, notified area committees, town area committees, and cantonment committees. Simple general things. Taxes, we have known that their revenue will be majorly from the taxes. Now, such local bodies, they may obtain grant of 3 categories, which is general purpose grant, specific purpose grant, statutory and compensatory grant. So what is meant by general purpose grant? So basically the gap that is there between the needs of the society and the resources they have. So the needs, whatever expenditure they need to be incurred and the resources they have, the gap is built in the form of general purpose grants. Specific purpose grant, as the name suggests, is for a specific task, right? And statutory and compensatory grants means, for example, with respect, let's say there is a tax which is collected by the local government, but the same is taken by state government. So as a compensation to such loss, if any grant is given, that becomes statutory or compensatory grant. So these grants under various enactments are given to local bodies as compensation on account of loss of any revenue or taking over a tax by state government or from local government. Is it clear? Is it clear? So we have understood as to what is a municipality, what is a locality, what all are covered, expenditure, the various grants that are given. So this topic I'll be taking up in the next session, which is what financial administration, because there is certain explanation that is required. Now, what are the objectives of audit of local bodies? So the important objectives can be like reporting on fairness of content and presentation of financial statements. So this topic objective is given on page number 9.25. Reporting upon the strength, weakness of systems of financial controls. Reporting on the adherence to legal or administrative requirements. Reporting upon whether value has been fully received on money spent, and detection and prevention of error, fraud, or misuse of resources. Simple. Simple. So this is with respect to objective of audit. Now, what will be the audit program? So with respect to the appointment, the local fund audit wing of the state government is generally in charge of the audit of municipal accounts. However, in case of bigger corporations, for example, Delhi, Mumbai, they may appoint their own auditors for the regular audit, external audit. What are the auditors concerned? Again, these are the same points as we have done for objectives. Rules and regulations, this is the same point as, if you remember, we have done expenditure audit, authorizations, rules and regulations, then provisioning, performance. These are the same points as we have done with respect to the expenditure audit, right? So now we are left with only one topic in this, which is what? Your financial administration. So this will require certain explanation. I'll definitely take this up in the next session. Now, students, just give me 1 minute. See, with respect to this chapter, chapter number 9, we are left with a topic which is local bodies ka financial administration. And then we are left with essay 710 of chapter number 8. These two topics I'll be taking up on Wednesday session, which is scheduled for chapter number 10. right? So only these two topics are left. And as I always say that before ending the session for today, my request to all of you that please go through the module till chapter number your 9. We have covered all the chapters in entirety. Nothing is left except for these two topics. And students, you will be able to take advantage of these revisionary classes if and only if you take them seriously. You need to attend the session seriously, and after the session is over, you need to go through the module. So Sukanya is saying, ma'am, it's very lengthy. I'm still in chapter 8. Yes, I understand. If particularly I talk about auditing subject, it is lengthy. I understand. It is a little bit there are a number of keywords that are required to be learned. So a lot of learning is also required. I understand all these things. So that is why I always tell you that try to cover up the topics that we cover in the session immediately after the session or the next day after the session. And after the Wednesday session, you have 4 days before Monday. So you can cover up all the topics that we have covered so far. And as I always say that as and when we'll move forward, like we'll be starting with 10th chapter. On Wednesday, before coming for the session, you should have gone through the entire module. That is starting from chapter number 1 till chapter number 9. Also, before coming for the session, just flip the pages of the earlier chapter so that you are able to recall and you are able to revise also, so that you need not have to spend additional hours in again learning the topics. Because if you just flip on the pages before every session now, you will be able to recall everything, and every important topic will be on your fingertips, because before every session you have just seen that what were the important topics that you have already understood and learned in the earlier chapters. Okay. So on a very positive note, I'm ending today's session thinking that before coming for the next session, which is scheduled for chapter number 10, you would have done at least till chapter number 8, right? Is it clear? Is it clear? So Sugaina, though it is lengthy, but you will be able to cover it up. Others also please reply whatever we have done. So we have finished our chapter number 9, except for a very small topic, which in 5 minutes I'll be completing in the next session, right? So students, thank you for making this session interactive. I really enjoyed taking today's session. So see you on Wednesday for session scheduled for the next chapter, which is chapter number 10. Thank you and bye-bye. Yeah, over.